Welcome to the London Outlook for Wednesday, the 31st of January 2024. Starting off with the economic calendar, there is no red folder news events for the London session. However, there are numerous red folder events for the US session. Of particular importance is the federal funds rate, the FOMC statement, and the FOMC press conference. However, these events typically happen towards the end of the day, well after our trading session. What I will say is the red folder news at 3:15 and 3:30, although employment related is not as significant as something like NFP, and if I'm any trades from the London session, then I'll keep these open and manage them accordingly based on the news release. In terms of navigating the end of the day, I'll make sure that I close all my trades by the London close or the London cross New York close. At that point, I wouldn't be trading any further, and I'd wait for the news to settle with regards to the significant news events. That's pretty much the economic calendar. We can chat about these some more as we get closer to the New York session, but I'll move straight into the chart, starting off from the daily. What we can see on the daily is that there hasn't been consecutive bullish or bearish candles, and because of that, I don't draw any specific daily bias. From a 4H perspective, in terms of market structure, nothing has really changed from our previous outlooks. We're still in this unconfirmed state where we're navigating trading both directions, as there's a possibility that either the bullish market can continue or the bearish market can begin getting validated after we have this break of structure. That is a swing break of structure. And then just touching on what has happened recently. So as you know from yesterday, I just want another tool. We've been reacting to this 4H Proton unconfirmed OB, and as a result we've had this leg created, and at the same time we've been reacting or having numerous interactions with this Proton previously confirmed primary leg. However, as you can see, yesterday we actually took out the significant target associated with this 4H OB or the substructure point. Given that that has occurred and we've weakened it, anything associated with this primary leg that was developed has now achieved its objective, and thus any shorting further from this based on this 4H OB idea is no longer valid. So what does that mean for our current trading? Essentially, it means that we can only trade to the upside on the assumption that this is liquidity and a new leg will begin forming to take out this substructure target right here. After we take out this substructure target, then we've essentially reset this primary leg right here, and from this point onwards, once we build a new leg, we can then short once again. So it makes our life quite simple for the London session today, as there's only a single particular direction to trade. Obviously, if we come down and actually body break this level, then we would actually validate numerous 4H OBs as such, and that will likely lead to us having new confluence to short to the downside. Obviously, we'll need to revalidate new substructure lows in order to continue shorting, perhaps tomorrow or Monday, but we'll have to see how the day plays out. There's quite a lot of significant news today, tomorrow as well, a whole bunch of GBP news, and then Friday is NFP day, so quite a heavy red folder news event day for the next 3 days or so. Then I guess now it makes sense to move on to the 15-minute chart. So like I said, our higher time frame narrative or bias suggests that we should only long, and from that perspective what we can see is that we have built a secondary leg yesterday. Currently we have our fib anchored to the previous low of the day, and in the current day, just a few minutes into the pre-Asia session, we did actually extend the leg. So yeah, I guess the only valid option at the moment is to actually anchor our fib to the previous low of the day and the extreme associated with the leg. I've set up a limit order right here, just based on the assumption that this is probably going to be used as liquidity. Also, the stop loss is really large, and I just want to bring up a calculator at the moment. So our ADR for January is about 80 pips. That's on the high end, and if we take a third of that, 26 pips is our max, our maximum, our maximum stop loss. So having said that, I guess if I really want to be triggered, I can set my entry like this, and perhaps assume that this will hold, and we've got that. However, in terms of previous day highs and lows of the days, I prefer that there's liquidity in the leg, and therefore I'm more happy just keeping my entry like this. With that being used as liquidity in the leg, we'll likely tap in as such and then continue to the upside. Obviously, there is a possibility that an Asia or Frankfurt low of the day will form, in which case London will need to validate it, or Frankfurt in the case of Asia, and in that case we can then use a fib anchored something like this, because this low of the day will be validated. If we range within this for the entire day, obviously when New York opens, then any new New York low of the days will invalidate the idea of trading based on pre-Asia highs and low of the days, and we'll need New York news to support why the New York low of the day should hold. But that can be elaborated on further as we get towards the New York session. For this morning, I'm just keeping this trade marked on. It's set in my with my broker accounts, and yeah, I see it as a valid trade opportunity. Like I said, there's only one direction to trade, which makes our lives a lot simpler. But other than that, hope you have a good London session, and we'll chat again for the New York session.